For many years, Kenyan banks have had to contend with having incomplete information about borrowers, which in turn translated to higher risk premiums on interest rates. According to bank industry players, lack of credit reference information has in the past led to the risk of overpricing low-risk borrowers and underpricing high-risk borrowers.
Banks, yes, have had a lot of challenges in their credit risk management over time. And this is because most of the borrowers, they may not have enough information about them when they make credit applications for consideration. And occasionally they find that because of skewed information, what is now referred to as information asymmetry, banks are not able to make good lending decisions in the absence of an independent source of information.
Additionally to that, there are other two reasons which are very important. When you go to a bank today, you'll find that most of the funds that they have are current account money. Now, current account money is short-term money. And the problem that comes with that is that if you're going to lend that for the long term, you need to keep on refinancing that. And that it becomes very expensive for a bank to keep on looking for new deposits to be able to refinance this money.
The high cost of credit has significantly affected most business operations as cost of production reduce their products' competitiveness. This is, however, set to change with the coming on board of the country's first Credit Reference Bureau.
One of the things that we've been struggling with, especially over a while, is the interest rate, which has been relatively high. And one of the outcry of most of the banks has been the default rate. And once we see the Credit Referencing Bureau coming into place, definitely it's going to reduce a lot of that, because it's going to be able to create opportunities for genuine borrowers to be able to access financing, as well as also reducing the kind of default rate that we've been having.
2 months after being licensed as the first Credit Reference Bureau in Kenya, CRB Africa has received close to 100% compliance from banks in the compiling of a credit information sharing platform.
Since the licensing, that was in February, what we're working on is the implementation across the banking sector. Remember, the law requires that banks report information to the CRB on a mandatory basis. Now, it also requires that the banks do it on a standardized template. So right now we are working on a piloting of the data sharing mechanism with the banks. Starting in February, that's when the first piloting was done. And we expect this piloting to go on for the next few months up until July, when the compliance requirements kicks in.
Central Bank believes this will play a significant role in making credit more affordable and accessible to Kenyans, and already there are positives being seen in the market, with Cooperative Bank joining Barclays Bank as the latest banks who have slashed their base lending rates to between 13% and 14% with effect from May 1st, 2010.
The last 2 years have been pretty difficult for the financial sector. Starting off, of course, with the problems we had in the country in 2008, and then the global financial recession that kicked in 2009. So what most lenders did, they became conservative. First, they restricted their lending, and secondly, because of the reflected risk in the general economy, they raised their interest rates. Now, what's happening in 2010 is that the sentiments are very positive in terms of business outlook, and we've seen banks opening up their lending books. And obviously, once you start opening up your lending books, you need to be able to attract borrowers by reducing your pricing.
Banking experts believe that sharing of credit information would enable borrowers to build a track record that they could use to access credit, as well as provide a boon for those in the informal sector and small and medium businesses to borrow based on their track record.
If you look at other countries where we've had similar things happening, I mean, credit reference bureaus being set up. We're talking about Singapore, China, India. I mean, over time, what has happened is that interest rates have come down. But then they have not come down by your maybe 200 basis, 300 basis points. I mean, for instance, I mean, some of the research that has been done indicates that maybe within 1 year, you see a 50 basis drop. But then the important thing to note here is that it doesn't come down across the divide. It depends on the kind of a borrower you are. If you have a good credit history, then of course for you will see interest rates coming down. But then for the person who's not maybe a credit-worthy person, for them the interest rates may still remain maybe still high.
Data from Central Bank of Kenya shows that non-performing loans as a proportion of total loans fell 2.67% in February from 2.93% in January this year, comparing favorably to the 30% levels attained in the 1990s.
Banks have really put a lot of effort in improving their credit risk management. Central Bank has also been a good player, a party to this process. The Central Bank has issued credit risk management guidelines. Banks have seen the need to strengthen those systems and identify borrowers in a much better way.
Challenges, however, abound in the compilation of data, and with CRB Africa intending to roll out the information sharing platform in July, the process has not been easy.
The biggest challenge in implementing a bureau, in fact, is getting the quality of data up to what is required across the banking sector. You're talking of 44 financial institutions in Kenya that are required to report to the CRB, and they have different levels in terms of financial information infrastructure, that is their computerization, and also capturing of the data.
Ultimately, it is expected that as banks standardize data reporting formats, credit information will be readily available, making it easier for credit-worthy individuals to negotiate for better personal terms.